Clouds are gathering over Amazon, and although at first glance this may sound like an exaggeration, numerous authoritative sources and industry insiders confirm that the threats the company faces could indeed reshape its future. Judging solely by the latest financial reports, Amazon shows steady growth, its stock is rising, and revenue remains consistently high. According to Financial Times, the company's net profit in the last quarter exceeded Wall Street analysts' expectations, and Bloomberg notes that investors still view Amazon as a reliable asset even amid a volatile market. But behind the impressive numbers lies a far more worrying picture. The main threat did not come from within or from American competitors. Experts' attention has turned to Chinese marketplaces, primarily Temu and AliExpress. According to Nikkei Asia analysts, in 2025 these platforms achieved a real breakthrough. Their audience in the United States grew by tens of millions of users in just a few months. Moreover, this surge in popularity is observed not only in America, but worldwide. From Europe to Latin America, Temu and AliExpress are becoming the default apps for buyers seeking low prices and a wide selection. This is where the key threat to Amazon lies. The United States is the company's main market, which underpins its global strength. According to consulting firm McKinsey, more than 60% of Amazon's profit comes from the US market. In Europe or Asia, the company does not hold such a dominant position, so compensating for even a small loss of the American audience would be extremely difficult. If Chinese players capture even 10 to 15% of this segment, Amazon will face a situation where growth in other regions simply will not make up for lost revenue. Insiders cited by Wall Street Journal note that closed meetings have already begun within Amazon to address the rise of Chinese competitors. On the agenda are strengthening the Prime program, expanding the range of private label products, and implementing aggressive discounts. However, the company faces a serious problem. The cost of delivery and storage in the United States is much higher than that of Temu and AliExpress, which operate through Chinese warehouses and ship products directly to consumers. All this competition unfolds against the backdrop of a new trade deal between the United States and China. Donald Trump, having returned to the White House, continues a policy of tariff pressure. In an interview with Fox Business, he stated that preserving American tech giants like Amazon requires a hard line against China. According to him, removing tariffs would be a death sentence for American e-commerce. In this case, many experts acknowledge that the tariff policy does indeed play a protective role. But what happens if Trump makes concessions to Xi Jinping? Bloomberg intelligence analysts warn that if tariffs are lifted, Chinese marketplaces will gain an even greater advantage, as their goods are already cheaper, and the absence of trade barriers will make them virtually unbeatable on price. Unlike Apple or Microsoft, Amazon cannot offset Chinese pressure through innovation. Its business relies on logistics and sales, where price is the key factor. In Washington, insiders are already discussing a scenario in which Amazon gradually loses its status as a global giant. The company will not go bankrupt. It will remain a major player, but will lose its former leadership. The Economist calls this scenario the Nokia effect, when a once dominant corporation cannot withstand competition from more agile and cheaper rivals. Interestingly, Amazon itself recognizes the danger. According to insiders who spoke to Reuters, company management is considering relocating part of its production and warehouse operations to Latin America to reduce costs and move closer to markets. But even such steps may come too late. Time is working against Amazon, and each month that Temu increases its market share makes a return to monopoly increasingly impossible. Thus, clouds are indeed gathering over Amazon. Today, its stock is rising, financial reports look strong, but the growth of Chinese marketplaces, dependence on the American market, and uncertainty over Trump's tariff policies create a unique combination of threats. If tariffs are lifted, Amazon risks losing what made it a global symbol of e-commerce. The company that was once called the unquestioned global leader could become a second-tier corporation, forever chasing, but no longer setting the rules of the game. This is why many experts today are confident that Amazon's future depends less on its own strategy and more on decisions made in the White House and Beijing. The fate of the global e-commerce giant has become part of a larger geopolitical game. It is also important to understand that the influence of Chinese marketplaces extends far beyond the United States. Experts from Deutsche Welle note that Europe is already witnessing phenomenal growth of Temu and AliExpress apps. In Germany, France, and Italy, they are rapidly taking market share from local retailers, and in some Eastern European countries, by the number of downloads in the App Store and Google Play, they have already surpassed Amazon. This is a worrying signal. If in Europe, Amazon could previously rely at least on user loyalty through Prime service and fast delivery, today these advantages are being neutralized. Chinese players have begun investing billions in local warehouses and logistics hubs. A similar picture is emerging in Latin America. In Brazil and Mexico, according to Statista, Temu has entered the top 3 most popular shopping apps in just a few months. This is particularly dangerous for Amazon, as Latin America was considered a growth buffer in case of pressure in the United States. Now, competition there is reaching a new level. If Chinese marketplaces consolidate their presence in the region, Amazon will lose the ability to even theoretically offset losses. Global consumer psychology should not be overlooked. Financial Times cites research showing that modern consumers increasingly focus not on the brand of the seller, but solely on price and selection. For millions of buyers, it no longer matters whether they shop on Amazon or Temu. What matters is that the same product may cost half as much on the Chinese platform. This is a fundamental shift in consumer behavior that works against Amazon. In addition, the political factor remains crucial. If Trump, according to Politico sources, agrees in negotiations with Xi Jinping to ease tariffs in exchange for concessions in other areas, for example, agricultural exports or energy, Amazon could be among the first to suffer. Economists already call this a deal with the devil, preserving some sectors at the expense of others. Thus, Amazon's story is turning into a kind of survival test. This is not just a corporate battle, but a measure of whether American business can maintain its leadership in conditions where China is using all instruments, from pricing and large-scale logistics to diplomatic negotiations at the level of heads of state. If Amazon loses, it will send a signal to the entire world. The era of American dominance in e-commerce is coming to an end. Cautious comments are already beginning to emerge on Wall Street. According to CNBC, several analysts from major investment banks are advising clients to pay closer attention to Amazon stock. While prices are rising, long-term forecasts are becoming less clear. Investors are asking how long the company can maintain its leadership if the price war with Chinese marketplaces continues to intensify. One Goldman Sachs analyst noted in a private client memo that Amazon remains a flagship of American retail, but for the first time in a decade, it has a competitor capable of truly changing the rules of the game. This acknowledgement from the financial sector says a lot. Even the most resilient giants can come under pressure when both the market and geopolitics work against them simultaneously.